Welcome to Tesla Top Secret Trading. Today's focus is something called the Iron Condor. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We also want to thank our Patreon supporters. If you enjoy our show and would like more ideas on better investing and trading, please join us at the upper tier above $100. You do get everyday sort of trading ideas, etc., and a little bit more attention than you would on the lower tiers. We also want to note that this is a copyrighted broadcast. Any reuse of the information provided is prohibited. So the question is, what's an Iron Condor and why does it matter? The literal definition from Investopedia is an Iron Condor is an option strategy consisting of 2 puts, 1 long and 1 short, and 2 calls, 1 long and 1 short, and 4 strike prices, all with the same expiration date. The Iron Condor earns the maximum profit when the underlying asset closes between the middle strike prices at expiration. In other words, the goal is to profit from low volatility in the underlying asset. So I wanted to present this today. I mean, there is the Condor, but the Iron Condor is a little bit more of an exotic instrument. The way I learned about this was that I was about to do a trade maybe a year ago, and I had maybe $150 in my account and to trade with, and the person I spoke with at Ameritrade was like, "Oh, well, you could do an Iron Condor, with that amount of money." And I was like, "Really?" So the stock is whatever it was at the point. Let's say it was $600, $700 a share. So I was kind of surprised that there was anything that I could purchase relative to my knowledge and interest in investing in Tesla that could actually make money. And I was kind of like, whoa, that is a shocker that anything like that exists. Where do I sign up, basically? So basically what happened was I did that trade, and from what I recall, it wasn't a huge profit, but it was, maybe $300 to $500 that was earned on it as Tesla's stock price was accelerating. So that's actually a pretty good rate of return with a relatively low amount of cash at risk. So that's kind of why I think it's an interesting trading idea. So before I go on, I wanted to note to you, this is top secret trading. So I agree with all of you. Every time we do one of these shows, somebody always pipes in that I have a lot of money and millions of dollars, and therefore I think you should just buy and hold for the next 10 years and you'll have $1 million too. The problem is, if you only have 10, 20, 30 grand, how can you make some money in this environment while you understand what's happening with Tesla? So hence, I actually don't want to hear your critique that you should buy shares long and just hold like a good investor should. We already know that. And I just articulated that is the best strategy. But if you're not rich, there are other techniques you could do to get to the point where you're rich, and now you can just sit there and buy the shares and wait for 3 to 5 years for everything to work out. So I was kind of shocked when this was recommended to me, because I was like, really? The reason I was shocked is if you go out and you try to buy a call or a put on Tesla, and there's any time value left more than a few minutes, at minimum, if it's close to the strike price where the stock is at, you're going to pay $1,000, $2,000, $3,000 for one option. So you kind of have a choice: go for the option, or basically go for the stock. One way you could do things, if you really like where the stock is at, is to actually get a margin loan and buy more stock. That way you could keep building your portfolio up in that manner as well. That's also a great idea if you're confident about where things are going and not worried about the market crashing as you're trying to implement your strategy. So I therefore wanted to introduce the idea of the Condor or the Iron Condor because I think it's a work of art. If you have a clear direction of which way you believe the stock is going, I would argue an Iron Condor in the direction of your price bias would be a good idea. So basically what happens is you can actually buy a call and buy a put. And you could buy a call and sell a put. So there are actually auto methods for Iron Condor and Condors in your app or application for the brokerage firm you work for. So if you go to options, so I'm thinking about E-Trade and Ameritrade here. So that at the top of the screen, you'll notice that if you go to trading and then you come down to options, you'll then look to your left and it'll give you a whole bunch of option strategies. So what it'll then say to you is what kind of strategy do you want to pursue and what's the price range. Now, my experience has been that the gap, if you have a gap between the put and call that's like $5 or $10, you might make 50% or 25% on your $150. What I actually like is more like a $20 or $30 gap between the two. And I really think this is a worthwhile experiment because it's a very low cost to try it out and the potential gains are huge. By the way, just remember, this is top secret trading, so we didn't tell you anything about this trade that you could try out. So when is this a good idea? Well, again, if you're low on cash, you want to participate in the movement of Tesla as we're heading into earnings and then possibly beyond, this is awesome. What I think is really cool about it is the fact that you're selling and buying at the same time, so the two instruments kind of offset each other, so the relative cost is therefore very low. So I read the Investopedia, or you could go to Wiki to learn more about it, but again, the beauty of this type of trade is the fact that if you don't have a lot of cash to trade with, A, or B, if you have a lot of cash and you want some really great leverage, being able to protect your up and down side at the same time, I think this is a great instrument. So what's the difference between this and, let's say, the straddle we talked about last time? Well, if you think about the straddle that we did, we're at exactly the same price point, and we're expecting that one instrument will become very valuable as the stock rises or falls in this case, and the other one become not, extremely not valuable. This process is different because it actually allows you to do a put and call strategy, but the other problem with this is that it limits your potential gain to the movement of the stock between the two prices that you've chosen. So I highly recommend you consider it if you want to make some good money, you don't have a huge portfolio. It's also great because you have risk for the funds you've put in, but it isn't unlimited risk like it would be if you did a naked call or put or something of that sort, which you can't do unless you can show a lot of cash to do one of those out there. So I haven't gotten heavily into it in this case, but I really think this probably should have been a stair step to it, but we're getting so close to the action, I didn't want to sort of hold back on that. Another strategy idea that's out there that I think is interesting is that, from what I can see, there's a large number of people with large numbers of shares that are part of our show, because I see the comments all the time, that have been what's called selling calls on Tesla. So if you own 100 shares of Tesla, you can actually do what's called selling an option. So each option represents control of 100 shares. So for every 100 shares you have, that's how many options you can sell. And you can sell calls or you can sell puts. So one of the things that I've been seeing from the people in our group who have been selling a lot of calls is that as Tesla stock price, so what happens is if you sell a call and you're within, let's say, 20 or 30 points of where the stock price is at, if the stock price, let's say of Tesla in this case, rises to the point where it breaches the strike price you've chosen. In this case, one of our viewers owned some 810s, and he was fearful of the fact that Tesla was going to cross over 810. Why? Because once the stock goes over 810, his shares will be called away, meaning that the shares that he holds will be sold, and then he will get the proceeds from that sale, but the option sale that he did, he ends up with some cash from selling the call. But what the ideal scenario for that instrument is, you sell the call, the stock does not go above a certain stock price by a certain time, and now you get to keep your shares and you get to keep the premium or keep the amount of money you were paid when you created and sold this option. So I kind of think right now is a really bad time to sell calls on Tesla because the stock price is accelerating and you're highly likely to get called away. So what's the problem with getting called away? Well, the challenge is that anytime you sell shares and you don't have optimized capital gains based on how long you own them, you end up with a big tax bill. So if you're getting close to getting called out, you may have to buy that back to avoid getting wiped out. Or if these shares are in a retirement account that it doesn't take a tax hit, you're in a good situation in that regard as well. So I have to say that if you're very, very well heeled, I actually have a friend in Baltimore of the show, and he's been doing 3% a month selling covered calls, for years. And so this can actually be a nice strategy to add cash to your account and have it be low risk. And as you can see, 12 months at 3%, that's pretty good interest rates on an annual basis for doing this strategy, which is why people tend to do it. Obviously, if you have something that's falling rapidly, you can also sell puts. Another way you could go where you collect the premium on that as it's falling. And if you will, it's a covered put because you actually own the shares. There are things called naked calls and puts, but you have to have a very large portfolio a large account in order to be allowed to do that, because in those cases, it's unlimited liability. And many firms have gotten shut down when they didn't play that situation properly because they lost so much money. So I think, part of the reason I didn't kind of want to make this show is that I've been trading options in general for about 25 years. But when it comes to things like the Iron Condor, etc., that's a recent phenomenon over the last year that I learned about them and started testing them out. So I'm not claiming to be an expert on it, but sometimes if you can introduce an idea, it encourages you to start watching videos, start reading about what it is, how it works, and enlist the help perhaps of your 800 number broker to help you to understand this better. Just a reminder, we have some SpaceX shares if there's interest. Also wanted to encourage you to take time to like and subscribe. We also want to encourage you to consider some of the health tips that we typically provide. I have to admit, I've been trying out, today I think I'll go back to one of my other sort of noticeables, which is particularly if you're above 6 feet, you may want to, as you talk with your doc, talk about types of exercises they recommend. I have a good buddy of mine named Dr. Dwight Tyndall. He's a spine surgeon based in the Chicago area. And he explained that at your height, unless you move to a soft surface that you're running on or exercising on, you're going to actually have to come in and have me do some work on you for back surgery. So if you don't want that, you really want to take some time to think it through and start biking and other exercises that'll save your knees and your back from an operation in the near future. So that's actually our health tip for today. Any rate, this is Greg for Teslafaninsight. Tschüss, German, au revoir, French, Lihit, Hebrew, Choda Hafez, Farsi, Strasice, Russian, Ni hao ma, Chinese, Konbanwa, Japanese, Heido, Swedish, and in Jamaica we say, enough respect, Walt Goodman. Thanks for joining us. Have a great day, and bye for now. One other thought that I had is just a reminder. Typically for classes like what we're doing, people are paying thousands of dollars. So we'd like to really encourage you to consider a $5 to $10 donation to support this channel. Thanks again for joining us. Have a great day, and bye for now.